Good morning, everybody. This is Desiree Dubois, and you are,
Gary Zimmerman.
and we are the founders and CFO of Homework. Homework is where you live, where you work where you live, anywhere in the world. And so we acquire properties through syndications and remodel them and remarket them for co-working and co-living. Perfect for digital nomads and remote workers, not only in the United States, but in Mexico and other areas. Many of our partners want to utilize or have thousands, if not hundreds of thousands of dollars in their self-directed IRAs or 401ks or
Or
industries like
just a,
that,
a regular IRA that they need to work on getting a self-directed
right?
IRA.
And they do not know that they can utilize those funds and invest in real estate,
Yep.
amongst other things. So we've gone through the pleasure. We really want to thank Renero Gamero. I hope I pronounced that right. Gamino, the National Sales Executive, Alternative Investors from InvestNext. Oh, New View, it's early.
Yeah.
New View
Yeah.
Trust.
New Trust Inspira.
New
It's
View
now
Trust
Inspira,
versus
yes.
now Inspira. So why don't you introduce him and welcome
So
him?
yes, he's an MBA AIF National Sales Executive for New View Trust, and we appreciate him coming on today. And I'm somewhat familiar with the what he's going to talk about, but he's going to have, I'm sure, a lot more information than I could give you. So we really appreciate him taking his time today to talk to everybody, and we'll have him go ahead and do the presentation, and then we'll have a question and answer session, which I'm sure is going to be very interesting. So with that, Renero, thank you very much, and the floor is yours.
Great, thank you. Well, good morning, everybody. Thanks for joining us. I know it's early in the morning on a Saturday. We appreciate your time and attention. Um, as they mentioned, I am the National Sales Executive for New View Trust, part of Inspira Financial. And this morning, I thought we'd talk about or just provide a high-level overview of what self-directed IRAs are, how they work, the kind of investments you can hold in a self-directed IRA, and just provide you some more color as you're looking to potentially use an IRA for an offering such as what they're offering at Homework. Disclaimer, we serve as a passive custodian. What we do is we custody assets and we custody assets for the alternative investment space. And what does that mean, alternative investment space? Essentially, alternatives are anything that's outside of the public markets, outside of what you'll find on the New York Stock Exchange, dealing with stocks and bonds. Alternatives may include things like, or asset classes like real estate, hedge funds, private equity, oil and gas, commodities, etc. So anything that's alternative to the public markets, such as stocks and bonds, the Wall Street typical and type of investments you might be aware of. We, as a custodian, do not provide tax, legal, or investment advice, nor do we sell investments. We custody IRAs and we hold those investments chosen by you, the client. So who is New View Trust? So New View Trust specializes in alternative asset custody, as I just mentioned, across asset classes within retirement portfolios such as IRAs. New View last year was acquired by a company called Inspira Financial. Inspira is based out of Chicago. New View is based out of just outside of Orlando. And the New View Trust name will be sunset at the end of this month, and we will be one Inspira Financial going forward. What does that mean? Well, we're the largest provider of self-directed IRAs in the space with over 62 billion in custody and over 7 million account holders. Collectively, we've been in the business in terms of the self-directed IRA business for over 20 years. So we have quite a bit of experience in the space and are often known and recognized as a market leader and industry leader when it comes to the alternatives world. So, interesting fact, of all the IRAs valued above $5 million, okay, it's interesting that only 25% of those assets are held within non-traditional assets. What that means is that out of all those IRAs, only a fraction are invested in the what we call the private market. In this case, the alternative space, whether it be private real estate, private equity, etc. Um, and so out of the 25% that are held in non-traditional assets, yet only 2% of IRAs hold non-traditional assets. Um, The self-directed IRA market is a growing market. It's a market that people are not as familiar with, which is why us going through this morning is very helpful to educate the community at large as to, the existence of self-directed IRAs and why they offer so much value and are a compelling solution when, looking at investment opportunities going forward. So what is a self-directed IRA? Sometimes self-directed IRAs are also called universal IRAs. And the difference between a self-directed IRA and an IRA is really none. It's really the same. It's just a term that we use because the investment selection is directed by one, ourselves, the account holders, thus the name self-directed IRA. It's really more of a marketing term than anything else, but it's an IRA like any other IRA that you're maybe accustomed with, whether it be a Roth IRA or a traditional IRA that we will talk about in a few minutes. Self-directed IRAs come in multiple flavors. The traditional IRA, the SEP IRA, the simple IRA, and the Roth IRA. Most folks are familiar with the traditional and Roth IRAs. Traditional, essentially, you're putting in money on a pre-tax basis, and that money grows tax deferred. One IRA that's become more popular in recent times is the Roth IRA, where folks are putting in money on an after-tax basis, and that money grows tax-free. And so depending on your tax situation, folks choose one versus the other. And then for folks that have their own businesses that are self-employed, they might want to utilize what we call a SEP IRA or a simple IRA. One of the things we've done, we've provided Desiree with a very nice what we call e-guide that reflects much of the presentation that we're covering this morning. And Desiree, hopefully you can send that out to
I
all
will.
those that are participating for them to review on their own. It's a great brochure that really goes, which is it's nicely put out for learning more about the space and educate you guys on different IRAs and how they work. In addition to the IRA market, people don't know this, but you can actually self-direct your accounts when it comes to health savings accounts and education savings accounts. So education savings accounts are typically used for college savings. Health savings accounts are typically used for medical expenses that folks, again, also put in on a pre-tax basis. They get a little bit of a tax advantage, and then they're able to use those funds for medical expenses that they believe they're going to incur over the course of a year, whether it be co-pays, deductibles, co-insurance, prescription costs, etc. So self-directed IRAs, because why they're so popular is because they allow you to invest in many more investment options and a broader universe than what's typically available in the public markets. Believe it or not, the public markets relative to the private market is quite small. In fact, I would say that probably 80% of the investable opportunities out there on the private side and not on the public side, believe it or not. With self-directed IRAs, you have the ability to invest in multiple asset classes, not just real estate, but also private equity, hedge funds, oil and gas, private companies, precious metals. We even have folks that will invest in farmland and timber. So a much broader universe than what's available within just stocks and bonds and what you find on the S&P 500 or the Dow or the NASDAQ. One of the items that I want to bring your attention to that's very important to be aware of is that those self-directed IRAs have a lot more flexibility in terms of the investment options, gives you a grander universe of things of how to put your money to work. The IRA is still policed, if you will, by the IRS, right? The IRS is what governs IRAs. They're the ones who decide how much money we can put in on an annual basis. They're the ones who can decide when we can tap into those funds without incurring a penalty. And so it's very important to be aware that they also have whole restrictions because they are so tax favorable when it comes to the kind of transactions you have within those IRAs. So, for example, in real estate, and we'll talk about real estate specifically since we're talking about real estate, with Desiree and her group. you can invest in real estate within an IRA, but just because it's a real estate offering or transaction doesn't mean that, hey, I can buy I can buy a home, I can live in it, and my IRA owns it. Or, you know what, I'm going to buy mom or someone in my family a home through my IRA, get the tax advantage, have the IRA own the home, and then I have my family relatives or relatives live in that home. That would be a prohibited transaction. So it's very important to be aware that even though these IRAs provide a lot of flexibility, there are certain guidelines you need to be aware of to avoid any issues, not with us, but with the IRS. So, benefits of self-direction. Well, we talked about the fact that it gives you a broader universe, which also is known as diversification. You still get the same tax advantages, whether it be tax, pre-tax or post-tax, and tax deferral through tax savings. And it allows you to invest in something you feel very passionate about or you find compelling. In this case, being able to invest in an offering from Desiree and Company that allows you to invest outside of the U.S. In a home and work type of setting. For those that are nomads, it's a great opportunity as well that you understand that marketplace and invest in an asset class like this. So it gives you a lot more diversity and a lot more option. Again, you need to be aware of the IRS policies. So, as I mentioned a moment ago, our IRAs typically come in, the most popular two different flavors, the Roth IRA and the traditional IRA. Depending on your circumstances, depending on your situation, one might be more beneficial than the other. Again, we don't provide tax advice, but it's good to be aware of what the options are. With the Roth IRA, your contributions are after tax. With a traditional IRA, your contributions are on a pre-tax. Now, how much can I contribute to an IRA? Again, that's also dictated by the IRS, and that changes typically on an annual basis. For this year, the most you can put into an IRA is $7,000, whether it be traditional or Roth. Now, if you're over the age of 50, you can put it up to $8,000 per year. And this is a little kind of a complicated slide, but it gives you a flavor of how much you can put in as well. I just mentioned the $7,000 amount, the $1,000 what we call catch up if you're over age 50, and how much you can put in for a SEP and IRA depends on, because that would be for more employer sponsored type of accounts. So if you have your own business and you want to put money into an IRA, a SEP or a simple allow you to put more than you would have put in on an individual plan, such as the traditional or Roth. In terms of the savings plans for health and education, the amounts are $2,000 for education savings plans, and for HSAs, depending on whether it be yourself or a family, the amounts are $4,150 or $8,300. And of course, there's also a catch up there as well. So I wanted to bring your attention to the amount of money that is put into types of retirement vehicles regarding private real estate. Because Homework is really a private real estate offering, I thought it'd be really helpful to give you guys some color as to how large the market is and how many folks like yourselves are investing in private real estate. And it's to the tune of about $59 billion across different defined contribution retirement, if you will, vehicles. And if you look closely for the IRA space on the individual side, and this was recently done for a 2023 survey. It's almost $7 billion in private real estate are being invested within individual IRAs. So it's a very large market and growing. In fact, we expect that market to continue to grow as more folks understand the advantages and the opportunities that lie within private real estate. So I thought that'd be very helpful as a little snapshot.
Mm.
In terms of the private markets are forecast to continue to grow to the tune of nearly $23 trillion by 2026. That was a recent survey done by S&P Global. More and more folks are understanding that the public markets provide, a nice foundation, but the private markets can sometimes often give you greater returns, greater diversification, and far more of a universe to invest into. And we expect that to continue to grow leaps and bounds over the years. and investors are becoming more and more comfortable with what we call alternatives, and financial advisors that we also work very closely with are becoming more comfortable with them as well, and educating their clients and their investors on why alternatives should at least have a space in a portfolio, not just stocks, bonds, and cash, but also some kind of allocation to alternatives, whether it be, again, real estate or some type of other investment offering that helps diversify the overall portfolio. Now, we recently had some favorable news with the Fed. Last month, the Federal Reserve, cut the Fed funds rate by 50 basis points, and hopefully that was exciting for anyone on the call to see and to hear. What that means is, gosh, mortgage rates are going to go down. Loans are going to be cheaper. Your credit card interest payments are going to be lower, and we're hoping that the Fed will continue to be aggressive, and they're cutting through 2025, and that's a good thing. We all know that the housing market has been very hot over the last number of years, and affordability has been a crisis across the country. I know where I live in Miami and where these folks are in California, we all know that home prices have gone up through the roof, and affordability has been a challenge. And we hope that we're going to see more demand, more inventory come online as the years go by, and home prices come down in terms of affordability. But we think that the market's strong. We think the market's going to remain strong, and there'll be more of a balance as rates come down, and more and more folks are able to make investments in their homes or investment opportunities. Like anything else, though, of course, whether you're using a self-directed IRA or an IRA for, stocks or bonds or, private real estate, it's very important that you do seek the guidance of a professional. Professionals, meaning an advisor that might advise you from a financial perspective, an accountant that might advise you from a tax perspective, or even an attorney that might be helping you with, creating a trust or some type of estate planning. It's really important to have those folks, give you their professional expertise as you make decisions on, something that is going to be long term, and obviously a big investment on your part. Market volatility is not just open, or it's not just applicable to the public markets, but it's also to the private markets, right? Real estate values can go up and down. So it's important to think that, hey, even though I have a self-directed IRA that provides me more diversification and access to more things, it doesn't mean it's any less safe or any more safe. Volatility will still be there. It's important to be aware of that. In addition, though private markets provide more diversification and many times, greater returns, it's also not as liquid, right? So when you're making an investment into a real estate portfolio, for example, real estate assets aren't, you can't just, buy in and buy out like you could with a mutual fund or a stock trade. So it's more liquid, and I think investors need to understand that even though they're illiquid, you're being compensated by a higher return typically. And of course, the regulatory considerations, such as what I mentioned before with the IRS, being aware of prohibited transactions, being aware of not putting in too much into an IRA than what you're allowed, because you can also be dinged for that by the IRS, and making sure that as you make these decisions, you're passing them through, those professionals, whether it be an accountant, an attorney, or an advisor. We at NewView, also Inspira, we've tried to mitigate the challenge in opening accounts like these self-directed IRAs. We are, again, the largest in the space, and with over 8 million account holders, we try to make it as seamless as possible for our fund partners, our relationships, and our clients to easily open up accounts, fund those accounts, and be an easy partner to work with. Like any other provider of IRAs, our account opening process, I think, is much easier, and we provide the same service in terms of whether it be a traditional IRA or a Roth IRA. Many times we have account holders or clients that might open up an IRA for the first time. Other times they might say, you know what, I have an IRA with X company, and I'm going to roll it over to Inspira and NewView, because not all companies provide or offer self-directed IRAs. Many provide IRAs, but not self-directed IRAs. We provide obviously self-directed IRAs. So, you might have an account at Fidelity or a Vanguard or a Charles Schwab, Morgan Stanley, many companies where they want to, roll over their IRA to us because that allows them to then convert that IRA into a self-directed IRA that then would allow them. I'm sorry?
I'm sorry, someone wasn't muted. Okay, I'm sorry, go for it.
Which will allow them to invest in any type of alternative opportunity, whether it be real estate or whatnot. Our account opening process is very seamless, very easy. It can all be done through a DocuSign to make it even more expeditious. And by the way, when you compare pricing, we're one of the more compelling and more affordable pricing structures in the marketplace, which is why many folks often tap us for that self-directed IRA need. Very important. When you're looking at working with providers like ourselves and others, it's very important to not only do your homework with due diligence in terms of the advice that you get from your professional folks, but also look at fees. And fees, and I always tell people fees erode returns. So obviously, if you can try to keep your fees low, that's a good thing. And one of the things that we're proud of is that we do not have any transaction fees, and that's good for you and something to think about when you're working with other providers and custodians like us. What are their fees? Because fees do make a difference and do matter. NewView Trust, the name is going to be sunset at the end of the month. Going forward, we will be operating as Inspira. And for more information, we have a QR code that you can go ahead and click with your phone. Also, you can find us on Facebook, LinkedIn, X, formerly Twitter, and other platforms. If you have any questions, obviously Desiree knows how to find us at NewView Inspira, and we'd be happy to answer any of your questions. Also, I think the e-guide that she'll be sharing with you is going to be very helpful to give you more color. Since I went more through a high-level overview, the brochure will give you more detail on many of the frequently asked questions that most people have.
Fantastic. Thank you, thank you, thank you. So
Sure.
opening up to our guests today, some of the questions that you may have. Is everyone clear on the process and clear on what it can be used for and so forth? Because what we've also ran, we shared this even with realtors. And my communication with the realtors is the fact that now the real estate industry has changed so much because of
Dramatically.
dramatically. And another offering that they could offer their clients, because do have clients that maybe have money,
Sure. Yeah.
and that's money, and that they don't want to move now because of the interest rates and so forth, but they could buy a second rental property. And this is also a great tool for them to learn about this, to be able to go back out to their clients and say, I know that you have equity in your property now, you don't want to move or whatever the case may be, but there's an option for a second home, for a rental investment property.
And I'd love to add some color on that. We actually have, so I run our B2B channel, which is business to business channel. We have a business to consumer channel, B2C, and we actually work with a lot of real estate associations and broker type of affiliations around the country that work with exactly what you're talking about, and try to educate them on how they can use a self-directed IRA for those type of opportunities. So absolutely, there's a big opportunity there as well to work with the realtor marketplace and the realtor community.
Yeah, it's more sales for the realtors, and that's
Absolutely
the market, and keeps them in the top of their client's mind, and actually keeps them as far as the real estate professional being able to offer that, and it's a lot more sales, and there's opportunities out there.
Yeah, opportunities for them, the realtor, but also ultimately for the end client and that buyer.
Absolutely. It's a chance for them, because a lot of people, again, they say they want to invest now because of, again, the interest rates and so forth. But if they're utilizing these funds, they have such great tax savings.
Sure.
That then they can buy that property, even if it is 6% or 7% interest. They can afford to buy because the numbers will still work out because they're not using the cash.
Yeah, we think that as rates continue to drop, which we expect them to do so, I think the market's going to heat up again, especially in places like where I am in Miami, where it's been kind of cost prohibitive for folks to enter the marketplace, and they've been waiting for the Fed to finally reduce rates or for inventories to rise or for prices to fall for various reasons. And so I think once that happens, we're going to see a lot more activity momentum as people become, less afraid to, to finally tip their toe back into the marketplace.
Okay, Kimley's got her hand up.
All right.
Yeah,
Go for it.
The most important thing, that was a very great presentation. Thank you very much.
thank you.
I was curious, you said about no fees. And if you can just elaborate on that
Not
a
no
little bit
fees,
more.
no transaction fees.
Transaction fees, that's what I meant to say, no
Yeah,
transaction fees. So
yeah,
elaborate on that a little bit more, because I know
yeah,
in the past, like if you go to move things or um
sure.
when you like need to take monies out or try and make another acquisition, at
Mhm.
those time, what kind of fees do we see or do we not see anymore? We just adding no more acquisitions.
Yeah, let's just take an example of even working with with your bank, right? I mean, not all banks are created equal, if I can say that. And so, depending on your bank, banks are notorious for fees, I think, right? So some banks are more favorable than others when it comes to transaction fees, wire fees, overdraft fees, etc. So I think whether it's an IRA or opening a bank account or applying for a mortgage or a car loan, whatever the case is, it's always important to factor in fees because those fees do ultimately make an impact on the bottom line. So what I was trying to say is that, with our firm specifically, we have fees for the account, certainly, of course, but one of the nice things that we don't have are transaction fees. And so that's something to be aware of as you're shopping around across custodians. Hey, who's going to provide me the best service? Where am I going to get the best value? Right, aka fees, and who are going to be the folks that are really subject matter experts in what I'm trying to accomplish.
It all adds up.
I tell everybody, hey, every dollar counts, right?
Yeah. So another thing that I share in this story, and tell me if it's when I'm trying to explain the process to someone, I say, okay, currently they may have their funds with a Schwab or Vanguard or something that's been designated by their work. A lot of times people have their IRAs
Sure.
as a result of
Yeah.
their work, and
Yeah.
usually their company has selected that money manager or that person that's managing their money.
Sure.
And then they get paid, and then they usually take the invest the same thing as savings banks, use savings accounts. They take that money and they invest it into assets that
Mhm.
were bringing them great returns, upwards of 18% could be or more, right? They
Mhm.
take the same thing to insurance companies. It's the way that they work. They take their money and they invest it and they make money on that money.
Right.
And they give you a percentage, usually very small, like 4 or 5, again, whatever it is, that's the percentage that you get. So by taking it now, because they're directing it for them, now for you saying, I want to direct my funds into whatever asset class it is, again, real estate, Bitcoin, notes, whatever it is,
Sure.
then you're cutting out that middleman. You're getting the profits. You're getting that spread
Well,
between
and
that.
to make it even more compelling, so in taking your example specifically, let's say I work for ABC company. I have a 401k with let's say called Fidelity. Well,
Mhm,
Fidelity will charge an advisory fee as
mhm,
well as a record keeping fee.
mhm,
We don't have an advisory fee because we don't provide investment advice. And in addition to that, once let's say you leave that ABC company as an employee and you decide to either keep your funds within Fidelity because the account's still there or you roll it over, there could be a transaction fee for doing so. With us, we have no transaction fees. We have the account opening fee, an annual fee, and that is it. And so to your point, all those additional fees do add up, and to avoid that fee working through us is obviously something that's obviously favorable to the account holder or to the IRA, account, IRA owner for sure.
Exactly. And that spread, that difference between what they're
Adds
getting,
up.
and they're cutting out that middleman. So that's how we can give you, higher returns. You can get
Right,
12, 13 to
right.
20% return on your money. People think, oh, how's that possible? Because you cut out
Yeah.
that middleman,
And by the way, guys, when you're working with advisors, I tell folks the same thing. Not all advisors are created equal, right? So you want to be aware of what they charge because their advisory fees could be, 100 basis points or more. 100 basis points is about a percentage. So, let's say you have I don't know, a $500,000 portfolio, and they're going to charge you 1% just to have their account with them, that's a lot of money over time, and that really adds up. And
Yeah.
so, and as that account continues to grow from 500,000 to a million, let's say in 10 years, I'm just making this up, hypothetical, in 10 years, imagine 1% of $1 million that you're paying just for the privilege of having the account there. And of course, hopefully that advisor is providing value. They're giving you good advice. They're making a difference in the return that you would have not gotten if you're not working with them. But nonetheless, again, as you're shopping around for an advisor, an attorney, an accountant, a bank, whatever it is, to always be very conscious about, hey, what is it going to cost me at the end of the day? How's that going to affect me long term? How does that affect my overall return? And what does that bottom line look like, right?
Mhm. And the thing is that you mentioned the advisor. Hopefully, the advisor is giving you results, because lots of times it's, you do it once and it just sits there year after year.
That's
Maybe
right.
do an annual report or say hi, everything
Right.
is
They might do an annual client
moving.
review,
Exactly.
if they're good.
Yeah.
And, and then you got to
And keep
reassess, hey,
growing.
yes, what has been the return that you've been able to provide based on the talent that you shared that I thought you had relative to what I'm paying for. Or the
Mhm.
question is, gosh, what am I paying for?
Mhm.
That's why a lot of folks also go to the Vanguards of the world, because the Vanguards of the world provide a lower cost fee structure without an advisor typically, and might do as well as what the advisor charges you, right, in terms of performance. So,
Mhm.
again, it's just doing your homework, doing the due diligence, being aware, like anything else, right? It's at the end of the day, it's your hard-earned money, and you want to protect that, like anything else.
Absolutely. Other questions? Raise your hand. Other questions, other ideas, other scenarios? This is because you've had so many questions.
I did have another question.
Yeah,
So we talked about like the traditional Roth IRAs, and then or
the Roth.
the Roth, the traditional and the
Mhm.
Roth, and then you
Yeah.
have those contribution limitations. So when you do a self-directed,
Mhm.
um, is it only applicable if I'm transferring an existing fund into that fund, or otherwise I have these limitations of how much I can contribute to my self-directed?
Yeah, good question. So, in terms of if you're rolling over, I have an account at Merrill Lynch, and I have $100,000 in my IRA. You can roll that over to NewView or to Inspira or to any other custodian for 100,000, so that the annual contribution doesn't apply. Now, when you want to add additional funds to the account on an annual basis, that's when that maximum contribution applies. So, for this year, the most that I can put into that account after I've rolled it over, if that's the case, is up to 7,000, unless I'm over the age of 50 and I can put up to 8,000, whether it be Roth or traditional. That answer your question?
It did. And for this program,
Hmm.
if you're after you do a rollover and you're probably going to be using after-tax dollars because you're no
Hmm.
longer with that employer. So within, I would set up initially a Roth, do the transfer into the Roth. I know I have to make some adjustments because of it was a pre-tax going into a after-tax fund. There'll be
Right.
adjustments up front, but then after that, I'm now guided by the Roth growth and contributions. So if I put in 2 or 3 years, I go buy a property, then the growth of that property, if I sell it, is now under the guidelines of that Roth, correct?
That's correct. Right.
Okay,
Exactly. So you're pushing out the tax, um, and it'll be tax free essentially after 5 years of having the account open.
gotcha. Thank you.
Yeah. It's very important though. You did raise a good question in terms of, hey, I have a traditional 401k, and I want to roll it over into a Roth IRA because I believe that tax rates are going to go up over time. So if I do a Roth, what they call conversion, I'm going to mitigate what that tax bill is going to look like going forward, because I know that with a Roth, my earnings grow tax free. However, be aware that sometimes that works out and sometimes that doesn't, depending on what your tax bill would be for that conversion. In some cases, the tax bill might be so high that it might make sense to leave it the way it is and just open up a new Roth account, just from scratch, and then go from there. But again, that's something that your accountant can advise you on, because again, they'll know your tax situation better than I would.
Thank you.
Yes.
Yeah, so just to clarify for everybody, so if you're doing a rollover or a conversion from a traditional, the $7,000 limit does not apply, correct?
Correct. Correct. Yeah. So rollovers, that doesn't apply. It's only for future annual contributions. And that changes over time. So, for next year, the IRS could say it could be, not again, I'm making this up, it could be 9,000 per year is the maximum, and then 10,000 if you're over age 50.
Mhm.
So the IRS dictates that. We are at the mercy of the IRS, and that's how much we can put in on an annual basis, whether it be pre-tax or post-tax.
Mhm.
Another question some people come up ask is that if they no longer work for that employer
Mhm.
and they have their funds, there's no difficulty, it's no
There's no
problem,
tax
there's no tax
implications
implication.
to roll it into.
None. Yeah,
Right.
yeah. The only time there'll be a tax implication, guys, is if you leave your employer for whatever reason, and then you take a distribution from that account. So typically, depending on your balance, if it's under 5,000, sometimes they make you roll over that money into an IRA somewhere else. Otherwise, they charge you a very high fee to keep it there, FYI, or they allow you to keep it there, and you keep it there like anything else. But if they make you roll it over, or you choose to roll it over, sometimes they might do what they call a direct rollover, where the money goes from where it was to, let's say, Inspira and NewView, or they might say, we got to send you a check, Desiree, and then you've got 60 days to deposit that check into that new IRA. It's very important, though, that if you don't deposit those funds into that new retirement vehicle within that 60-day period, again, this is IRS policy, you'll be charged a penalty as if though you took that money out as a distribution. So it's very important to be aware that if you are rolling over, hopefully you can do a direct rollover versus a physical check that you may forget to deposit or what have you, because you want to avoid that penalty. Because if you're under the age of 15 and a half, that penalty is 10%, and it also be included into your taxable income for the year. So if I make $50,000 a year as a hypothetical, and I had a rollover of 50,000, and I didn't roll it back into a retirement vehicle like an IRA or another employer sponsored plan, the IRS is going to charge me $5,000 penalty, right? 10%. And that year, my taxes are not going to be based off 50,000. They're going to be based off 100,000. So very important to be aware of that.
Absolutely. I believe in direct either as well, because again, the check
Yeah,
could get lost in the mail. So
absolutely.
many things could happen, and they don't accept any
People
exchange.
forget, oh, I forgot to do it. You'd be surprised. It's amazing what can happen out there. So it's really important to be aware of that, because you don't want to be dinged on money that you work so hard to save because of an oversight.
Go on.
Yeah. So just for everybody out there, if they want to do a direct rollover,
Mhm.
would you help them do that?
Yeah. So essentially, the paperwork that we provide, an investor or an account holder, you fill it out, and it's not so much us on our end receiving the funds, it's often where it's originating from and how quickly and efficient those parties are to follow the instructions that you, the account holder, put on the paperwork in terms of the rollover. So it's very important that when you fill out the information, it's filled out, accurately and completely, and that your existing money account is done properly by the folks that manage that, because we don't have control over what's outside. We only have control what's inside. With us, we try to do our best to make sure everything is done properly. But sometimes it can be a challenge when we're working with so many different parties that may not be as efficient or as expeditious.
And one of the things we also wind up sharing with them is that after they've done the transaction, and they've
Mhm.
invested into our fund or anything else that they participate in,
Mhm.
the dividends or the distributions goes back to the
The
custodian,
IRA.
and that's how they avoid the
Back to
tax.
the IRA.
Yeah,
Yeah.
exactly.
Yeah. That's
And
correct.
then that way it accumulates again, and it actually I consider it a forced savings account in a sense that
Yeah, because you got that we call compound interest. And so
Mhm.
it's like that snowball that's growing and growing over time, because everything's being reinvested back into the IRA. So even though we're the custodian, we're the record keeper, if you will, we're the ones that are, the stewards of those assets. At the end of the day, it's the account holder, the investor, that owns the IRA, that owns the value of that IRA. We're just providing the service of record keeping it, and ensuring that everything is done according to IRS policy.
Fantastic. Okay, any other questions, feedback, thoughts, thank yous from anybody? Thank you so much for your time,
Mhm.
Rand.
Oh, no, it's a pleasure. I hope that everybody has a lovely weekend. I hope this was helpful. Again, I think that the e-guide that we're going to be distributing is going to be also a very good read and something to keep in your files. I will the e-guide that we are sending out is a little dated, so the contribution limits on page 9 of that e-guide are previous contribution amounts. So please, disregard those amounts because I've just mentioned that this year it's 7,000. However, the rest of the information is in fact correct and information that you should be aware of as you're making decisions when it comes to self-directed IRAs and the IRA retirement market as a whole.
Well, thank you,
Okay,
thank you,
thank
thank
you.
you. I appreciate your time. Enjoy the rest of your
Yep.
weekend. And if you
Likewise.
has any questions, we'll be able to reach out to
Yes.
Inspire.
Yes.
Yeah,
The
absolutely.
recording will be available. So that's one of the
Really
things.
helpful.
And we will send out the guide to
And
everybody.
I know it's a little early, but it's funny. I was just in California and I was walking by a department store and I could not believe, guys, that the department stores were already having Christmas decorations in their windows.
Of course.
So I know it's a little early, but I want to wish everybody a wonderful holiday season. I know we're not even Halloween yet, but I figured,
Merry
hey,
Christmas, Happy New Year.
if they're doing it, I might as well do it as well. So happy holidays,
They've
happy
been
New
at
Year,
that up.
and I hope everybody have a prosperous and wonderful 2025.
All right. Thank you so much.
Thank you, Rand.
Appreciate you.
Thank you, guys.
Appreciate it.
Bye.
Bye-bye.
Bye now.